After a roller coaster ride for gold's price since the 20th of September, a sideways motion prevailed. Issues such as the recent financial data from the US, the Fed's intentions, the negative correlation of the dollar with gold's price, and an ongoing uncertainty being generated by the Israeli-Palestinian conflict, we will also worry for the escalating tensions between South and North Korea. We will be concluding this report with a technical analysis of gold's daily chart. The negative correlation of the dollar with gold's price has been interrupted over the past week. At the same time, the dollar continued to strengthen against its counterparts, while gold's price failed to materially drop. Similarly to gold's price, US bond yields remained steady at a relatively high level since our last report, failing to affect the precious metals price. Hence, for the time being, we abandon the focus on USD's movement in conjunction with gold's price and intend to focus on other factors. Yet, should the dollar continue to strengthen or should US yields renew the upwards tendencies, we may see gold traders not being able to ignore the greenback's rally or even preferring US bonds which are interest-bearing instead of gold. On the other hand, we may see the Fed's intentions affecting gold's price. After the release of the US employment report for September, showing a hotter employment market in the US, the market's expectations for another double rate cut have been erased. Now Fed funds future imply that the market widely expects the bank to proceed with 25 basis point rate cuts in each meeting, which is accord also with the September dot plot. Our worries, though, were generated by the release of the US CPI rates for September last week, as the inflation report for the past month came in hotter than expected. Fed policymakers sent out mixed signals, with some even casting doubt on the expected 2 rate cuts. Should we see more Fed policymakers being inclined towards less rate cuts or doubting the market's expectations, we may see gold's price retreating. The war in the Middle East is ongoing, with the Israeli forces pounding the north of Gaza and southern Lebanon, even UN positions. In a latest development, the Israeli cabinet seems to have reached a full consensus on the method, timing and strength of the response to the Iran attack during security consultations. The plan to strike Iran awaits approval from the Security Cabinet for implementation. Despite Israeli President Netanyahu telling US President Biden that Israel will avoid hitting Iran's nuclear facilities and oil facilities, that easing market worries somewhat, a possible retaliatory hit by Israel on Iranian targets may cause an Iranian response. Overall, uncertainty remains at high levels as to the stakes involved in the conflict, and a possible flare-up could provide safe haven inflows for the precious metal. Gold's price edged higher after hitting on the 2,600 support line, allowing for a sideways motion to prevail, with the boundaries being set between the 2,685 resistance line and the 2,600 support level. We tend to maintain a bias for the sideways motion to continue, given also that the RSI indicator remains above but close to the reading of 50, implying a rather indecisive market. Also, the upward trend line incepted since the 8th of August is still intact, yet for the time being the price action seems to have hit a ceiling at the 2,685 resistance line. Hence, for a bullish outlook, we would require the precious metals price to breach the 2,685 resistance line, which is also a record high level for gold's price, and set the next possible target for the bulls at the 2,760 resistance level. On the flip side, should the bears take over, we may see the bullion's price breaking the pre-mentioned upwards trend line in a clear signal that the upward movement has been interrupted, breaking the 2,600 support line, which has been the floor of the current sideways motion, and start aiming off the 2,530 support level, which used to be a resistance level, yet given that the price action has moved above it, its role has been reversed. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you